All right, welcome back. Today, we're going to tackle a term you hear thrown around all the time in business and finance. You know, that whole process that can take a private company and just, bam, turn it into a household name overnight. Yep, we are talking about the IPO.
So why do IPOs cause such a stir? Well, just look at this. A couple $1,000s invested in the Commonwealth Bank's IPO way back in '91 could have ballooned into nearly $63,000 today. And that's not even counting dividends. That right there, that's the kind of mind-boggling potential that gets everybody's attention.
So how exactly does a company pull off a move like that? Well, we're going to follow the entire story. We'll start with the basics, then get into the why they do it, walk through the whole journey to the stock market, and cover the big debut. And then we'll wrap it all up by looking at what it all means for you, the investor.
Okay, first things first. Let's talk about the massive shift a company makes. This is the great transition from being a private little club to being out there in the public eye. So what in the world is an IPO? It stands for Initial Public Offering. But what that really means, it's the very first time a company, which up until then was owned by, a handful of founders and private backers, sells pieces of itself, or shares, to anyone and everyone. It's their grand entrance onto a public stock exchange like the ASX or the NASDAQ. That brings up a pretty obvious question, right? Why would any company want to go through such a complicated, not to mention expensive process? Let's dig into the real motivation behind this move. When you peel it back, there are a few huge reasons. The big one, of course, is to raise a massive amount of cash to grow the business. But it's also a major payday. It's the exit that founders and early investors have been dreaming of. And it's not just about the money. Going public really puts a company on the map. It boosts their credibility and gives them a powerful new tool, public shares, to attract top-tier talent or even buy other companies.
So we get the what, and we get the why. Now let's get into the nitty-gritty, the how. This is the IPO journey, and it's a long road from the boardroom to the stock market floor.
And you gotta understand, this is a total marathon, not a sprint. First, a company hires investment banks, they're called underwriters, to manage the whole thing. Then comes the really heavy lifting, due diligence. It's a super deep dive into the company's finances, which all gets compiled into a giant legal document called a prospectus. After that, the execs go on a roadshow. It's basically a global tour to pitch their stock to big money investors. From there, they set a final price, hand out the shares, and then finally we get to listing day. Let's just quickly define that term underwriter. Think of them as the expert guides and the sales team for the IPO, all rolled into one. These investment banks are the pros who handle everything from figuring out the price and navigating all the regulations to actually selling those first shares to the public.
And what about that other thing, the prospectus? The best way to think about it is as the company's ultimate resume. It's got everything, the detailed financial reports, their grand strategy for the future, and, this is super important, a long list of all the things that could go wrong. It's designed to give investors the complete picture before they decide to buy in.
In all that paperwork, all those meetings, all that travel, it all leads to this one moment, the big debut. The climax of the entire journey, when that company's stock finally hits the open market.
The second that stock starts trading, things can get absolutely wild. The price can swing like crazy because, for the first time ever, the entire public market, we're talking millions of buyers and sellers, is deciding in real time what they think that company is actually worth.
And this is exactly where that famous day one pop comes from. If the share price jumps way above what it was initially offered for on that first day, those early investors can sell their shares for a super quick profit. That pop is what makes the headlines and gives an IPO that feeling of being an instant success.
But this is a huge but. There's a date every smart investor circles on their calendar, the end of the lockup period. See, for the first 3 to 6 months, company insiders, the founders, the executives, are legally banned from selling their shares. Why does that matter? Because once that period ends, a flood of new shares can hit the market as all those insiders finally cash out, and that can push the stock price way down.
So, with all of that going on, let's pivot and look at this from the perspective that matters most to a lot of us, as an individual investor. Are these things a real opportunity, or is it all just a bunch of hype? It's a real balancing act, isn't it? On one side, you have the dream, the potential for huge returns and getting in on the ground floor of the next big thing. But on the other side of the scale, you're dealing with insane volatility, a company with a very short public track record, and the harsh reality that it's actually pretty hard for the average person to even get those shares at the initial offer price.
This kind of skepticism has led to a pretty common joke among traders.
that IPO really stands for "it's probably overpriced." It's a little cynical, sure, but it's also a pretty good reminder that these things are backed by a massive marketing engine. So, buyer beware.
So, after going through all that, what is the single most important thing to remember the next time you see a big, flashy IPO making headlines? Let's get to our final word on this.
Here's the absolute bottom line. When it comes to IPOs, patience is your best friend. It is so easy to get swept up in the hype, that fear of missing out. But the truth is, if a business is truly great, it's not going anywhere. You'll have plenty of chances to invest after the initial tornado of excitement dies down, and the company actually has some time to prove itself as a public entity.
And that really leaves us with one final question to think about. After all the news articles are gone and the lockup periods are over, is that hot new IPO a real golden opportunity for the long haul? Or was it just a cleverly marketed gamble all along? The answer, as it always is, requires doing a little bit of homework. Thanks for joining me.